Americans For Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans For Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, April 5th, 2019. Over the past few years, I've noticed a trend to either support the fair tax or to attack the fair tax, not on its merits as a way of funding the federal government, but because it does not achieve other objectives of the critic. For example, those who believe that too much money is being spent by the federal government believe that the fair tax will rein in the spending. Some who believe that not enough money is being spent on various programs label the fair tax as an instrument of their opponents to stop them. Neither is accurate. The following is a statement made in a report prepared by the Joint Committee on Taxation entitled Distributional Effects of Public Law 115-97. Quoting now, "The primary purpose of a tax system is to raise revenue to fund government expenditures. Analysts generally judge a tax system as a way of raising a given amount of revenue in terms of how well the tax system handles issues of economic efficiency, fairness, and administratability. The design of a tax system involves trade-offs between these different considerations. Measures designed to ensure compliance may increase the complexity of taxation for individual filers. Measures designed to promote simplicity may cause distortions in investment decisions, and measures designed to promote growth may alter the distribution of the tax burden." End of quote. Now, this is a surprising statement when you view the remainder of the report, in which the committee uses some very questionable logic to try to portray the 2017 tax reform as doing many of the things it described above. However, the first sentence, "The primary purpose of a tax system is to raise revenue to fund government expenditures," is indeed the simple truth. The best tax system is the one that raises revenue for the government in a manner that is least offensive and intrusive to the taxpayer and is the least disruptive to the economy of a country. The one thing that is largely ignored by people who rely on the present income payroll tax system for their livelihood and for their ability to control others is that all taxes are really taxes on consumption. Now, unlike the federal government, if a citizen doesn't spend strictly in accordance with their income, they're forced into bankruptcy. Therefore, any levy or tax that takes away from the money that a citizen has to use for consumption will obviously reduce the amount left for consumption. Therefore, a property tax, gasoline tax, Social Security tax, Medicare tax, income tax, and a sales tax are all taxes that reduce the amount of money a citizen has available for consumption. Now, the primary difference between these taxes is whether they are collected prior to consumption or at the time of consumption. The present income payroll tax system taxes prior to consumption. You can only use what's left after paying the income payroll taxes for your consumption. For example, if you get to keep 80% of every dollar from your paycheck, you will only be able to consume up to the amount you get to keep. This means that if you purchase something for $1, you'll have to earn about $1.25, subtract the 25 cents in income payroll taxes, and have that dollar left over to pay. Under the income payroll tax system, your consumption is taxed, but it's just hidden from you. Now, contrast this with a fair tax. You get to keep all of the dollars you earn because there are no federal deductions for income payroll tax. The fair tax is levied only when you purchase new retail goods and retail services, and everything is paid for with 100-cent dollars. The fair tax eliminates the complexities of the income payroll tax system by taxing new goods and services when they are consumed. It only requires retailers and providers of retail services to collect and remit the fair tax. These retailers, along with all the other companies and people in the United States, will no longer be burdened with the income payroll tax system, and in most cases, they're already collecting state sales taxes. In addition, the fair tax provides compensation to the retailers for collecting the tax. Let's take a look now at government spending under the fair tax. Once money is collected by the fair tax and received by the U.S. Treasury, the Congress and the President will determine how it's spent. Now, that's just like it is with the income payroll tax system. In the early 1990s, I met with John Sununu. At the time, he was President George H.W. Bush's chief of staff, and we discussed replacing the income tax with a national retail sales tax. He was very familiar with the proposal and told me that it was much better than the income tax and would lead to more economic growth. I then asked him if he would support it, and he answered that he could not because it gave Congress too much money that it would recklessly spend. A few years later, I was in Congressman Charlie Rangel's office when he joined in on a discussion of the national retail sales tax that I was having with his tax aide. He told the aide that he thought that the U.S. would move to the national retail sales tax because he believed it was the only way to produce the income to the government that it needed for the spending that he wanted to do. Let's examine some possible effects of the fair tax on government spending. While the purpose of the fair tax is to raise money for the federal government, there are some important differences between the fair tax and the present income payroll tax system. Under the present income payroll tax system, federal taxes are often hidden in the prices of goods which we purchase, thus the consumer has no idea how much of the price he's paying goes to federal taxes. Compliance costs for the income payroll tax are also hidden in the prices of goods that we purchase, and again, the consumer has no idea how much of the retail prices he's paying actually goes towards paying those compliance costs. Although workers see the amounts withheld from their paychecks, they often just assume that the amount they are making is their take-home pay, not their gross pay. Congress in the swamp can change the income tax code at any time and use this threat to let all of us know that they're the ones in charge and they can dramatically affect how much of our money they will confiscate. Now, under the fair tax, although all U.S. residents are not filing under the income payroll tax system, almost everyone is a consumer who makes purchases of new goods and retail services daily. Because the retail products will no longer contain the costs of the present income payroll tax system, this will allow prices to fall by at least 10%. With each purchase of new goods and retail services, the resident will see the amount being paid to the federal government. Nothing is hidden in the price of the new goods or retail services with the fair tax. In conclusion, after we enact the fair tax, a person wanting to reduce government spending can explain to people that by eliminating X dollars of spending, the 23% rate can be reduced to X percent. A person wanting to increase government spending can argue that the new spending will require an increase in the fair tax rate from 23% to X percent. Much to the consternation of the swamp and their allies in Congress, all American consumers will see the true cost of the federal government spending under the fair tax. They are appalled at the idea that the little people will not just trust their betters and be led around like sheep with leashes attached to their noses. Under the fair tax, the amount of the 23% required to fund each program promoted by Congress can be quantified. Even if Congress and the swamp try to cover up their spending with more loans, it will be easy for each of us to see the amount of the 23% that is being used to pay the interest on that debt. Because the economy will grow more rapidly under the fair tax, there will be more revenues, and even if spending continues at its current level, the increased revenues and decreased evasion will narrow the deficit. If a president and Congress decide that they are going to start paying down the national debt, then they can make a deal with us to increase the fair tax from, say, 23 to 25% and put the extra money in a trust account using the proceeds to start reducing the national debt. Or they could propose the same trust account to implement any number of additional programs. The fair tax is agnostic on spending. It just provides a way to fund the federal government, but in a way that all U.S. residents can see the cost of the government and see how much it costs each of them every time they make a retail purchase of new goods or retail services. As President John Adams said over 200 years ago, all the perplexities, confusion, and distress in America arise not from defects in their Constitution or Confederation, not from want of honor or virtue, so much as from the downright ignorance of the nature of coin, credit, and circulation.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org or bigsolution.org.